Hello, everyone, and welcome to the Spain Startup Conference 2022. My name is Adam from Startup Network Europe. I'm from Ireland. I'm in Dublin right now, but I love Spain. Me encanta España. I lived in Oviedo in Asturias for 1 year. It was the best year of my life, so it's an honor to do this event today. A bit about Startup Network Europe. We do online conferences for startups across the continent. Now we're doing more face-to-face events, and these will include events in Madrid, Barcelona, and Valencia later this year in October. We also build communities. In terms of communities, we actually have a Startups in Spain Telegram group, which I will share in a moment. So the plan for today is very, very simple. It's a 90-minute event with 20 speakers in just 90 minutes. We have Spanish founders and CXOs in Spain, but also in Silicon Valley, in New York and Miami. We have Spanish venture capitalists and angel investors, and we have international scale-ups. Now, in terms of today, I just want to say thank you to our three sponsors. Personio is our first sponsor. They are a HR software for startups and SMEs, which helps improve operational excellence to pave the way for strategic work to shine. Amplitude is our second sponsor. They are the digital optimization system. With their trademark behavioral graph innovation, they sort through millions of seemingly random actions to instantly find patterns of customer behavior, and also predict outcomes and adapt experiences. And attendees of this conference can actually get Amplitude for free for 1 year by applying for their scholarship program. And finally, we have Twilio. Twilio is a cloud communications platform used by millions of startups to engage with billions of people worldwide. And using Twilio web service APIs, software developers can make and receive phone calls, text messages, and other communications. And again, attendees of today's conference can apply for free credits through the Twilio Startups program. Now, startupnetwork.eu/Spain, if you visit this link, you can see a list of our speakers, our sponsors, and also our upcoming events. Now, the plan for right now, I'm going to speak with Marta. Marta is Vice President of Asociación Española de Business Angels Networks, the Spanish Association of Business Angels Networks. She also has other positions, which I will explain in a moment. Marta, before we begin, I want to introduce the Spanish startup ecosystem. Right now, according to Dealroom, there are at least 11,000 verified startups in Spain. You can see a crazy growth right here. In 2016, these startups in Spain got almost $1 billion in funding. And nowadays, just 5 years later, last year they received over $4 billion in funding. And 2022 is also going very, very strongly. So Spain is full of potential and it can grow more and more and more. Now, I'm going to stop sharing my screen. And Marta, how are you?
Nice to see you all.
Yeah. So we met in Cork last week at the annual Congress of AEBAN, the European Business Angels Network. So I guess really our conversation today can focus on Spain. You are Vice President of the Spanish Association of Business Angels Network. You're also President and Leader of the Investment Committee of WA First Team. And you are a partner at both Cupido Capital and Pinama Inversiones. Now, I've explained Dealroom, the data in Spain. So could you tell us why is Spain a good country to set up a startup in?
Okay. Well, I think that Spain is a country of entrepreneurs. If you see the data, more than 94% of the companies in Spain are less than 10 people, which means that, well, it's quite easy for people to start a small company. I think there is another reason, and it is that we have a very well-educated Jeff people, combined with not very nice salaries and some unemployment rate, which is the highest within the highest in Europe, which incentivates the young people to take the risk of doing a business and a startup, which is always a risk, yeah. But these talented people coming from universities with less risk than in other places I think that is part of the basis. At the same time, in the last years, there has been an enormous development of places where entrepreneurs can pitch their projects. 5 years ago, it was not that easy to find them. I think as well the money in the market, that were a lot of money with no profitable possibilities in the stock market, etc., has taken the possibility to invest in this new way of doing business, and has developed as well a variety of possibilities to invest in startups, like crowdfunding and specific funds, etc., that didn't exist 5 years ago. And as well at universities, it has become, I would say, mandatory to have a section for promote entrepreneurship within the alumni. That it wasn't the case when I studied, I can tell you. And well, there are a number of other things there. I think that there are some administration, local administration in particular, and giving some facilities to establish the company, giving them a co-working place for free, a lot of mentoring as well. So I think there is a number of different good things that have happened in the late years that have helped to develop that much the startups in Spain.
Okay, and what can be improved in the Spanish startup ecosystem?
Well, I think there are always room for improvement, particularly from the business angel point of view, which because I'm a business angel, I think that we could have some more benefits, fiscal benefits, for instance, tax benefits, and in particularly when it relates to the group of investors. So people that put a small amount of money in different projects, which gives a lot of opportunities for to have a balanced portfolio with little risk. And then the situation today in Spain is not good for this kind of business angels. From the point of view of the startups, I think that there are some tendencies to make some improvement to reduce taxes, to get some more grants and helps for entrepreneurs. It is being built, but it's not yet still the case. So I think that if we are able to get all these helps that we are receiving from Europe and give it back to the entrepreneurs, we will make it to work better. And I think that there is another thing that we can do as business angel, and society in general, and is to promote good governance in these startups. So that's made that this becomes a real criteria, because the good managed companies become good profitable companies that create some employment and stays for long. And I think that there is room for that as well.
Great. And final question, you have a big passion for diversity. Can you explain why this is important for the investment community?
Okay, I think in general, I would say that diversity is equal or high performance in any area. In particular, in a startup, which the teams are very small, the diversity must be a must. Yeah. So in terms of age, in terms of culture, in terms of where you come from, and of course, gender. So, and then it comes to explain a little bit what is Women Angel for STEAM. So Women Angel for STEAM is an association of women business angels that was created 4 years ago, we are all women, and we invest in projects founded by women, not only by women, but at least mixed teams. And the reason for that is because there are very little, I mean, the number of business angels, women business angels is less than 10%, and this is a problem all over the world. Entrepreneurs are less than 20%. They receive around less, I don't remember the same number, but it's between 2 and 3% of finance, even being 20%, even in the mixed teams, which is incredible. And there's some BS in this objection of finance. And the other thing that is for us very important is, and that's why you add the term STEAM, is that we think that the new economy is basically based on technology, science, digitalization, and so on. And unfortunately, women are underrepresented in these areas, both professionally and at a university. So if we don't help the little number of projects of women in this area that are less financed, then all the path that we had obtained of being basically nearly equal in the business arena won't happen, because we are not in the new economy. So that's the reason why we are pushing for that.
Marta, muchas gracias, okay, and we'll see each other again, I'm sure. Thank you so much.
Of course. Thank you.
So we'll return to the Founders in Spain section. So our first speaker in this section then will be Pablo, co-founder of Clicars and the Guinness World Record swimmer. And our question for you and all the other entrepreneurs in this section is, what is the most interesting challenge that your startup has overcome?
Yeah, thank you. So I think the most interesting challenge was how to do hyper growth while being profitable. So my first company, Clicars, we went from 15 million the first year to 500 million right now, without raising capital and being EBITDA positive, right? So that's a 30x in 4 years with no external funding. And what I learned is that when you don't have money, you get like very creative. I think sometimes getting a lot of money is a problem. And I think these lessons are going to be very useful in the next. So I think what you learn is that you actually, every cost or every investment, you ask the question, is this going to help me to sell? Actually, we used to have like a funny phrase, does it sell any car? And if any expense or investment doesn't sell any car, it was a stop, right? So it's hard, but once you get into profitability, it's a very virtuous cycle in which you control your destiny. And actually, we sold the company. It was a very large exit, actually announced last week. And now I'm focusing my second startup that was EBITDA positive, but we combine it with raising capital. So I think that's the best of the world. You are profitable, you raise, because raise is an option, not an obligation. And actually we raised my second startup 600 million. And you can grow really, really fast. The biggest challenge is how you are raising money, being profitable, at the same time have a frugal culture where every euro counts. And you have to have that discipline that is painful, but it pays off at the end of the day.
Okay, thank you very much, Pablo. And our next speaker is David Tomas, a co-founder of Cyberclick. And our question again, what is the most interesting challenge that your startup has overcome?
So thank you, Adam. For me, I would comment on two main challenges. The thing, as you can see, I start to have some gray hair. It means I was in the beginning of the .com era, 1999. We were able to raise a little bit more of €1 million, but we were hit as thousands of companies by the .com crash. So that was very hard. I mean, and I don't know if that's something we're going to leave when you see that the market literally disappears. There's no access to capital, and most of your clients go bankrupt. I mean, that was a very hard time. We managed to go beyond that period, but it was very hard. I mean, we had to reinvent ourselves like 3-4 times and start to do different things because there was not a real market, and we didn't have enough money. Even we had to shut down some of our operations, and and change the way we were doing things. That would be the first challenge that I would comment. The second one, once we got over that, and that was like 2003, I would say, when we started to get some traction and you know, getting some products that work out for us. As I guess probably many will say, it's finding the right people, aligning everyone with what we want to achieve, what our goals, what are the way we want to work, and the type of technology and service that we want to provide. And that was something challenging. We finally learned how to do it, but I would definitely suggest to anyone starting a company to really have a look on that, because it's I think one of the key points to succeed, how to grow your team in a sense that communication and alignment is paramount.
David, gracias. And Salvador, co-founder of Alter Cinco.
Yes, so hello everyone. So Alter 5, basically just to give you a context, we are a platform for specialized lending for real assets related with energy transition. So we are trying to disrupt a market that have been during the last, I would say, 20, 30 years, channeled through banks or through corporate finance or through private equity. So our big challenge is that we are disrupting a market where we are channeling institutional capital from pension funds, insurance companies, and large family office to projects of renewable energy mainly today, but also to everything of real assets, to finance everything related to real assets, of the energy transition through a vehicle in Luxembourg. So the thing is that we have to convince and to get the confidence from the institutional investors and also from the sponsors and developers. And I think this was the biggest challenge, because at the end of the day, we were the new guy, not only in the town, but also with a new different approach by digitizing all the investment and financing projects. And that was very difficult because you need to get the confidence. So we founded the company less than a couple of years ago. We were profitable since the year one. And we also signed a large agreement of 150 million euros with the European Investment Fund, also with institutional investors for more than 200 million euros. But just not the challenge. I think one of the things of the idea is how we achieve this is because what we think is that cooperations between startups and large corporations is becoming easier day by day. And at the end of the day, these large corporations, they see the opportunity, they see the market, and also they have a lack of execution. They are not able to execute these kind of technologies or platforms very fast. So I think that one of getting the confidence of these two sides of the marketplace, the supply and the demand side, was thanks obviously that we create a large partners and like placeholders, like a law firms of partners that were trusting in Alter 5 because they saw that this could be very complement to their businesses and they were not able to do that internally. So I think this kind of cooperation help us to position Alter 5 like this new specialized lending more efficient than large funds or private equity funds.
Thank you, Salvador. And next up, we have Emilio, founder and CTO of BEONPRICE.
Thank you, Adam. It's a pleasure to be with you here. As you know, BEONPRICE is a B2B SaaS solution that helps hoteliers to maximize their revenues through artificial intelligence. And with any doubt, the main challenge that we have faced at BEONPRICE is the pandemic we have recently passed. Those have been 2 years where hotels have suffered a lot and many hotels were closed. So from the beginning, we have so clear that we have to empathize with them with the situation they had at that moment. For example, being flexible with the invoicing and those kind of things. Also, we were so clear we're keeping all our team in the company, and also accelerating our product development, investing more on that. Okay, and as a result, despite the difficulties, the results cannot be better, because we have got the trust of our funding funds. Also, we have loyal clients, and we have consolidating our repositioning in the market as a revenue management system, and we are competing face to face with the leaders in the market to become that leader. Okay, so right now is the best opportunity for us, because the market or the sector is emerging again very strongly, and there are great opportunities.
It's Emilio, thank you very much. I really appreciate that. And next up, we have Juanjo, founder of the Hotels Network.
Hi, Adam. Thanks for having us. So the Hotels Network is also like Ruben in the hospitality space. So some of the challenges are similar. I tend to think about challenge in two ways. I think all startups have challenges in the technical side of things, and then on the commercial side. For us on the technical side, one of the things that we did is to go through a full transformation on our data infrastructure. We are a type of company that collects a lot of data, and we were building new products. And when you reach some scale, let's say normal things don't work anymore. So in the last couple of years, we went through a complete rebuild of the infrastructure to go to a model in which we process real-time data and analytics on a huge scale. And that has been quite a challenge from a tech point of view, because the team had to be trained and learn on technologies that are relatively obscure. So it's not like anyone out the street can go directly and start to work on those. And we are now at the end of this process, and has been hard but very successful eventually. And then on the commercial side, clearly this couple of years have been really strange in the hospitality industry. However, we are now booming. So I think the message, if anything, is that if you can live through a really hard situation, the skills you develop can be applied to really grow quickly after things go back to normal. Because eventually, this idea of the regression to the mean, that always happens in life. So now we are back to travel being a fundamental human need and exploding. And we want to be able to take advantage of that back to market. No? And we are now already twice the size that we were before the pandemic.
Oh, well, congratulations on that. It was a very tough time for businesses, so it's good. It's good to see you in that situation. And our final speaker in this section will be Alberto, founder of Mobile Dreams Factory, DelSúper, Gelt, and Super Robotics.
Thanks, Adam. Well, I think that I have been in many different companies. Right now, I am in Gelt. And I think that in all the different companies, it depends on the stage, what is the interesting challenge, what the stage that you are. In Gelt, we are a cashback company, just to give a context. We're a cashback company. Who doesn't love to have cashback or cash returns to your pocket? No, so for making the purchase or for purchasing groceries or travel or whatever. No? So we started Gelt a few years ago, 6 years ago. We were flat the first years, no investment. We were like validating the model, building the technology. Last 3 years, we grew 30x revenues. We passed from 3 people to 170 employees. We opened in the last 2 years. We opened 4 countries, Mexico, Colombia, Argentina, and Brazil. During pandemic, that it's pretty challenging. So for me, I think that the challenge here, it's how to grow the business and how to make it profitable. No, and moreover, with the situation in the market, with the increase of the interest rates, or I don't know, with all these situation that is happening right now, it's how to grow the business, but of course also how to attract talent to make this grow, not only to make the growth, but also to make it sustainable, and how to align this talent with the same goal. So incentive, it's also how to incentivize people, how to put in the same boat everyone to achieve this grow and to achieve this profitability. I think that we all start as entrepreneur. As you see, I found many companies, but I think that the main challenge is how to be a businessman and how to be profitable and how to become less dependent on venture capital or less dependent on external capital and use the capital only to grow your business, not to sustain the business.
Okay, thank you very much. And I will actually present the polls that I did earlier. So very quickly, where are people based? So Madrid is actually the most popular city. 40% of you right now are in Madrid. Hope to see you at the Madrid Startup Conference. Then Catalonia, then Andalusia, then Valencia, and then other parts of Spain. We also have an international audience with some people from Europe and the Americas, Asia and Africa. So only Oceania and the Antarctica, I think, is not represented today. The other question that we asked earlier, attendee roles, 51% of you are CXOs or founders, which is very impressive. 14% of you are investors or venture capitalists, and the rest of you work in marketing and sales, tech, and other areas. So great, we'll go on to the next section, and this is actually a 10-minute discussion with Alfonso de la Nuez. Alfonso, welcome. How are you?
Thank you. Doing well. Thank you very much for inviting me.
You're very welcome. And can you tell us more about UserZoom, please?
I better, because I founded the company. Yeah. So I would have to be good at telling you what it does. It's a software as a service company specializing in user experience research. And so we offer a platform for mostly enterprises to conduct automated and remote research studies, whether it's usability testing or surveys or all sorts of tests that you can do to optimize the user experience. Well, first to understand the user experience and the quality of the experience people have on digital products, and then the insights that we collect from the end users help our customers make better design decisions and build great digital experiences.
Yeah, now you were founded in 2007 as a bootstrapped startup, and since then you have raised a total of $136 million in funding over 4 rounds, which values your company at $800 million. So UserZoom, obviously it's a huge success. Is your concept of UserZoom very different now compared to 15 years ago?
Yes, the answer is absolutely different, because 50 years in internet time is like 150 years in real time. Let me just correct one thing real quick. 136 is already a lot of money raised, but the fact is that since we count the 4th round or the recent Tomas Bravo round, the amount is now actually closer to 700. So just to correct that. So yeah, a lot of money raised. That's what happens when you're in Silicon Valley, I guess. Yeah, the company is very different because we bootstrapped it thinking that it wasn't going to be a big company and the market opportunity wasn't that big. So what we did is we bootstrapped from a whole lot of friends, family, and fools, mostly the fools. Government grants, bank loans, and then a family office, active venture partners who came in after a couple of years to help us internationalize the company. But again, we never really raised any institutional capital or any, we never actually asked VCs for money because we never thought that this was going to be a big business. Over time, things changed and user experience became a lot more strategic to companies. Much more important, and therefore companies, mostly big enterprises, they started giving us quite a bit of money, for licensing our technology and for a yearly subscription. So when we, after the first initial stages, I call it the UserZoom 1.0, it was all about product market fit and understanding our customers and understanding if our product was good enough to charge, the $30,000, $40,000, $50,000 a year that we were, the ACV that we had back then. then we understood that, hey, this could be a big business. And we actually had VCs and private equity actually, trying to partner with us and offering us to partner and take the company to another level. And today I call this the Users 3.0 version, because we've raised all this capital, because the company is obviously doing really well. We have enough size, and the market opportunities is certainly a lot bigger. So completely different company. The 3 co-founders that started the business, one of them is no longer with us, but the 2 co-founders, we're just employees. We're trying to scale the business, but we're surrounded by phenomenal talent that have a lot of experience, and the product is way bigger. There's been 4 acquisitions made. One of them actually last week in France, and the numbers speak for themselves, right? We're 400 people, $100 million in ARR, are about to hit that. That's a completely different business than when we started, for sure, in Barcelona.
Great. And how will these acquisitions help you?
Yeah, so there's been each acquisition is, I always talk about them like kids. Your kids are all very important to you, but they're very different from each other. And so each acquisition we've learned a bunch of lessons. Some of them were product related. So we just wanted to add more firepower to our platform, and just add products that would allow us to be broader, in our toolkit, so to speak. The others have been more a little bit more of acqui-hire, because we needed talent. And then the last one actually is really interesting. It was just done last week. It's a geographic expansion. So the purpose of that acquisition was really to expand in the EMEA market, where we're already very strong, because obviously we started in Spain, but the EMEA market is still lagging behind, and so the geographic expansion was the reason why we did this acquisition. All very different. It's fascinating to see. We've made a lot of mistakes, and what I really like is that once you make those mistakes, then you learn lessons that you can obviously apply for your next acquisition. And don't underestimate the how important it is to have experience in M&A, and have also investors that can back you up and can help you, both during the due diligence negotiation period, as well as, of course, the most important part, which is once the deal is signed, in the integration process. So it's been phenomenal. I mean, it's been a great ride so far.
Yeah, well done, Alfonso, on everything so far. Now, you've mentioned in the early days you had co-founders. How did you meet them, and were they very different from you?
We met at the consulting company that we were all at back in the early 2000s. We were working on similar projects, and basically working together on solving problems for customers, building websites and defining their online strategy. And what we noticed is that, hey, there's all this money poured into building experiences, building digital products, but no one cares about the end user. No one really speaks about the target persona, the target user, not even the buyer, but who's going to actually use the product, right? So, we all got together and decided that, can we build a company dedicated to doing research and testing? They're two different things, although they're very similar. Understand the end user, understand how they use your product and what do they want, and whether they're having issues or not. And so we built a company called Experience Consulting, which is the first startup. I've only done 2. And UserZoom is actually born out of that experience that we had, more in the consulting model. And so in terms of my co-founders, we were very different from each other. I think that I would say that I would characterize myself more as the sales or go-to-market type of entrepreneur and leader. One of the other co-founders who's still with us is more of an engineering product focused kind of leader, and he's been CTO since the very beginning and still is. And then the last one was more of a finance administrative leader, operational leader. So we had a really nice mix, a really, really powerful mix of personalities as well as expertise. And I really believe that it was one of the top reasons for our success in both of these startups.
And I suppose finally, you're very passionate about product, I can see. What is a big mistake or a big piece of advice that you see startups nowadays not doing, or advice that you'd like to give them?
I think, I mean, you know, to me, the biggest thing about user experience in today's age, where everyone is basically using some sort of, you know, UI to interact with the brand, right? So the biggest is more of a culture or mentality mistake, so to speak. And I'm not sure that's a mistake. It's just simply that there's a maturity in the market in how you build software, right? There's some companies that are fairly mature when it comes to user experience, at least from my lens, right? Or our lens in UserZoom, which is, hey, you know, I'm building software taking into account that there's an end user out there, and everything we do, from design to development to product management to analytics, everything we do has this one user in the middle, right? And you just basically do everything for that user. Because of that mentality, or that way of I guess, philosophy, almost, I call it, you know, or culture, product culture. What you find is that these companies that are doing really well are actually doing really well, not just from a coolness perspective, but from a financial perspective. You know, those companies are actually outperforming their competitors, you know, because they actually have, you know, a lot more designers on board, a lot more researchers on board. You know, for instance, Google obviously is a little bit of an extreme example, but they have about 1,000 user experience researchers. You know, these are, I mean, like, they have more UX researchers than probably all Fortune 100 companies combined. And they just really focus on understanding the end user for every single thing they do, right? And so then there's Airbnb, which is another one of my favorite examples, where the founder is a designer, actually, you know, and formerly trained designer, founder and CEO, Brian Chesky, and he talks about this all the time, right? I mean, obviously, Steve Jobs was kind of the same thing. So I think that I wouldn't say the biggest mistake. I would just say, instead of the mistake, I would say, here's what companies actually do. And these don't have to be large companies. This can be startups. They actually invest quite a bit into really understanding who the user is, and they invest in design. And I would say that I would do that if I were to go back again, you know, with the only software company I've put together. Is that I would actually invest in user experience, research and design before I invest in sales and marketing. You know, let the product experience be your best salesperson, you know, to convert users into fans and have them do the marketing for you.
Yeah, I love that. Just do a good job, and your customers will follow. I think it's not common enough today in business. So very, very good comments. Thank you, Alfonso.
Thank you.
Yeah, and thank you, and all the best from Dublin. Really appreciate it. So next up, folks, we have our VC venture capital section, and Tom, you will be our first speaker in this section. And I suppose our question for you and the other speakers is, given your experience, what tips do you have for Spanish startups and scale-ups getting funding in 2022?
Okay, we're going into a slightly difficult market, but by all accounts, particularly for slightly later stages. I think perhaps the most important lesson right now for most startups is that if they want to raise funds relatively fast, they're going to have to be more aggressive on valuation than they were previously. There was more liquidity in the market 3 months ago, 6 months ago than there will be in the next 6 months, and so it's you know to try, and you can see valuations at a public level sort of dropping. Well, that's going to, you know, cascade down to all levels of startups. And so I think people are going to have to be more flexible in terms of valuations. At the same time, if they're not more flexible on valuations, they've got to be very careful about how long it's going to take them to raise the money. I'm very much, Alberto made a good point earlier on. We were saying, look, you know, the less dependent you are on external financing, the better. And I think that's, even though I'm talking from a VC perspective these days as an entrepreneur, I'd certainly agree with that point. But if you need financing, the sooner you can fill up your coffers and ride out the storm, I think the better. And to do that, you're going to have to be more aggressive on valuations. In fact, we've already started seeing it. I do an analysis of our deal flow on a month-by-month basis, and I can see a steady drop in the valuations that people are asking. To give a specific example, the company we're just about to invest in right now, I'm just waiting for them to confirm. We sent a formal offer on Friday. They started off with a valuation of 4 million, and they're closing the deal with us and with other investors at a valuation of 2.8. So if you're not prepared to do that, be prepared to wait to make sure that you've got the runway to do it, because the last thing you want is to find yourself in a situation where there's no cash in the bank, you've got to pay your salaries, and it's a fire sale or the end of the road. In those circumstances, that would be my number one recommendation.
Brilliant. Thank you so much. Great piece of advice in a short amount of time. And next up, we have Elena Torres, Managing Partner of Pau Capital.
Thank you, Adam. So in order not to repeat what Tom said, I was expecting that someone would go on that way. So I would say the same message as I tell always to everyone. I focus more on seed stage. So the first thing is don't give anything for granted. If things go well, it can go wrong. So just fight every day as it was one new day. Surround yourself of great talent, not the best one, but great, the best you can have, because people is what make companies. Control cost. I think that even when there are good moments, you have to control cost. You don't have to overspend, and you have to show how agile you are adapting to the market, how fast are you performing. Identify your USP and get your customers addicted to you, because if we see that you have as addicted customers, there is a business, and probably we will want to invest. Identify your key metric and make it increase exponentially. We like the hockey sticks. Tom was mentioning about valuations. I think that if you always look for fair valuations, you will not have this fluctuation when crisis comes. And at the end, look for travel partners. It's not about money. There is a lot of years that we will be together. So it's better that you have good investors next to your side that help you in the tough moments, but also in the good moments. So start building relationships now. Don't wait until you need the money. And that's it. Go for it.
Elena, muchas gracias. And next up, we have Ivan Feto, Principal at Axon Partners Group. Given your experience, what tips do you have for startups and scale-ups getting funding this year?
Yeah. Thank you very much, Adam, for the question. Well, I think it's becoming more difficult after what Tom and Elena has said to add something new to the table. But I agree that maybe today, the moment that we are seeing in the market, it's not the same one that we had 1 year ago. And I'm sure that in a few months, things will maybe become a little bit worse than they are right now. So my main recommendation, especially in our case at Axon, that we are mostly focused on scale-ups and companies in later stages, it's like, try to focus mostly on profitability. I think, Pablo at the beginning from Clicars, he was mentioning that at the end, how they become profitable very early and so on. I think that with the current situation for bigger companies, it's going to become maybe more difficult to fund in the future. And if you want to do plans for the future, I think you need to be really conservative about future funding and do your business plan with an scenario where maybe you are not able to raise a newer round for whatever reason, either because the appetite in the market for your company, it's not the best one. And on those moments, I will say that although maybe it's like going against my business as VC, I think the best investor that you can have is your own customer. No? So focus a lot on customer acquisition and retaining those customers that you have.
Okay, Ivan, thank you very much. Really appreciate that. And I think your advice is very relevant. I did a poll of 179 people, and 61% of you in this webinar right now are looking for investment. Many of you are not startups, so a huge majority of startups here are looking for funding. If you want to connect with any of the VCs and investors in the conference, just visit startupnetwork.eu/Spain, and you can see a list of their websites and everything like that. So we'll go on to the next section with Personio, where we are going to talk about HR, and our speaker in this section will be Pablo, Manager of Sales Development Spain at Personio.
Hello, guys. Nice to meet you.
Pablo, how are you? Can you tell us a bit about Personio, please?
Yes, sure. So basically, Personio is an all-in-one HR software for small and medium businesses. We're based in Munich, Madrid, Dublin, that it's where I'm currently at, Amsterdam, and we are opening soon in Barcelona and Berlin. Basically, our goal is to automate HR tasks as much as possible, so HR people can focus on what's important. So strategy on the one side and people on the other side. What else? Currently, we are serving 5,000 customers and operating in over 80 countries.
Yeah, and how old is Personio? I think it's only 5 or 6 years old, and it's grown to so many employees.
Yeah, so we started operating 6 years ago, and so you can have an idea. So I started working for Personio 2.5 years ago, and we used to be 350 employees. Today we are more than 1,500. So it's been huge.
Wow. So there's a lot of talk today about attracting talent, but also retaining it. Why do you think there is so much focus on this topic nowadays?
Yeah, this is what I've read somewhere. This is called like the talent war, something like that. Actually, we recently published a study focused on this topic. And what we noticed is that after the pandemic, there's a lot of people who are leaving their jobs. You probably know, this has been called the Great Resignation. Priorities have changed, and people are demanding more flexibility. We believe that HR should take a part on this, and we believe that HR needs to develop the right strategies to retain people. And the right strategy should be one that reflects both their needs and wants, in this case, flexibility.
Okay, so flexibility, very important thing. Now, in terms of employee strategy, can you tell us why you talk about this so much? Personio talks about this a lot in its own webinars, and why should HR prioritize it?
Yeah, sure. So as you basically know, HR is the engine of every organization, because without the right employees, a business won't be able to reach their goals, right? People strategy is basically understanding and planning how to attract, develop, and retain your people. If I would have to sum it up in one sentence, it's basically the art and science of connecting the needs, wants of future and current employees to the business objectives. And as mentioned before, we believe that people are a company's biggest asset. And as so, we believe that not having the right strategy will have an impact not only on your employees, but also in the business as a whole.
Great. And in terms of HR, I still see a lot of startups and established companies using Excel sheets, and nothing is linked. How do you think startups can better use digital tools for their HR strategy?
So, for example, in the case of an HR software, you will be able to automate as much admin as possible. So you will have more time for strategic topics. And let me give you an example. For example, with Personio or with an HR software, you will be able to automate the onboarding process. You probably, all of you know the onboarding process, you're familiar with it. With an HR software, you will be able to automate all the tasks that onboarding involves. this means that you will have way more time for strategic topics, like, for example, retention that we were mentioning before.
Great. And what are your top 3 tips or top 2 tips for HR and recruitment nowadays?
Okay, yeah, so I have 3. So the first one would be detect what motivates and drives performance in your company, and then design the people strategy accordingly. Then, regarding the people strategy, build a simple and sustainable people strategy that you can sustain on time. And then the third one, and this is something that we actually do at Personia, foster a feedback culture and also implement a good performance and development tools so you can track this culture.
Right, and we talked earlier about flexibility. So do you see most companies coming back, having their employees in office or being completely remote, or a mix of both?
I think we're gonna go to a mixed model. I know that lots of people, lots of companies actually are already offering like fully remote jobs, but I think that people like to go to the office. At least this is my case. So I think we will be transitioning to a mixed model. Yeah, for sure.
Yeah, I mean, same. I came back to Dublin because we're hiring people, and I like being in the office. I'm in WeWork now, actually. So I just did a couple of polls actually on this topic. It's going to be really interesting to discuss with you in the time we have left. So very briefly, should companies post salaries in job adverts? 80% of you say yes, 20% of you say no. As I scale, I find it is actually not a black and white topic, because sometimes it's complicated, I guess. Is your startup more or less efficient when remote working? 84% of you say yes. What is your favorite thing about remote working? Increased productivity. And what is your least favorite thing about remote working? Lack of relationships among coworkers. So Pablo, your day to day, are you in the office 5 days a week at Personia, or are you doing a mix?
So in my case, I'm coming here 5 days a week, but 5 days a week. But this is my personal case because I like being in the office. Also, we have a lot of new joiners and I like spending time with them. But we recently launched something called Personia Flex, and we have total flexibility to come to the office. We're also allowed, for example, to work from other offices around Europe. So I could go to Madrid next week and work there for 2 weeks or 3 weeks, or even go to the US, even if I wanted to work from there.
That's really, really cool, actually.
It's really cool.
Yeah, and I see a lot of co-working spaces. You have a pass in Dublin, and then you can actually go to Amsterdam or London. I've done that recently. And then the final set of the poll results: who is involved in your recruitment process? The vast majority of you do it in-house. Is your HR and recruitment strategy efficient? Most of you say yes, but not very efficient. And what is the hardest role to find the right person for? Engineering. Is that a surprise to you, Pablo?
Engineering, no, absolutely not. No. Actually, we need to hire a lot of engineers, and it's one of the most competitive markets, especially here in Dublin. So you probably know Adam, yeah, right?
I do. And we should meet sometime, by the way, in Dublin. But Pablo, muchas gracias, okay? And next up, we'll go to our next conversation, which is with Samantha Richardson, Principal Visionary and Consultant at Twilio Startups. And I was in London 2-3 weeks ago, and we did like a hybrid event. So you were on the screen, but I was with Chief Product Officers.
Yeah, it was fun. It actually worked out really well. So, all the nervousness about hybrid, but actually it worked out well.
And did you pick your Volver poster for today?
I thought about that when I logged on. It is here permanently. I have another one on this wall. I'm a huge fan. It wasn't just for the Spanish conference, but a happy coincidence.
Yeah, I remember it. So basically, could you briefly explain Twilio, and we can actually talk about customer retention after that? Yeah,
sure. So Twilio is probably one of those platforms that you're using every day and you don't realize you're using it. So what we do is we're a customer engagement platform, and we provide everybody from startups right the way through to enterprises the tools or APIs to be able to build your own customer experience. Within this, we have, email capability. We've just bought a customer data platform as well, Segment, so that we can bring that all together and really help customers of whatever size or maturity kind of engage with their customers in the right way, in the right place, at the right time. Something like 1 trillion interactions went through our platforms last year. So it's big. And when I say you're probably using Twilio every day and don't realize it, it's Airbnb was mentioned by Alfonso earlier. It's the likes of the Airbnbs and the Lyfts and the Ubers and those kind of digital native brands that were core to Twilio's growth. But obviously we've expanded quite dramatically over the past couple of years.
Great. So lots of startups are talking about marketing. Let's get more customers. But then they get the customers, they don't do a great job, and the customers go away. And that's the death of many startups. What do you think of this? Do you think there is too much of a focus on getting customers versus retaining them?
Yeah, I do. I think there's been a recurring theme, right? Helena said it and talked about these addicted customers. But in order to get addicted customers, you need to be still delivering a great service, resolving queries when you need to, being responsive to customers, retaining them and engaging them. It's all very well to have, really high numbers of acquisition, but that's a very expensive habit to get into. We know that over the past sort of a year or so, acquisition of customers online has risen by about 50%. It's only going to rise more and more. We see a huge amount of our own sort of large customers coming to us saying, we want to move to far more of this D2C model, partly because they want to own the data and then start to really build out a far better service and engagement model so that they can keep their customers and retain them. I think loyalty is really morphing into something different now, and it feels like the stakes are higher than ever as it costs so much to acquire customers. But I think to measure yourself on customer acquisition and customer acquisition alone is you need more than that. You need to understand who you're retaining, who you've got as those loyal customers, and really nurturing them to make sure they will be your bread and butter.
And Samantha, let's talk about growth, actually. Obviously, there's a lot of different tools that we can use. I've done a poll here. LinkedIn comes across as the most effective way to engage with customers in terms of growth, but we still see email do well. We see phone calls, social media, WhatsApp, keeping in mind that most startups here are B2B. What are your own thoughts on that?
I think it's interesting because, again, what we've seen is that B2B companies are kind of mimicking B2C companies in the terms of the way that they like to engage and create service with their customers now. I think during the pandemic, we saw a huge number of organizations shift to using WhatsApp out of necessity. And we all know here, right, necessity is the mother of invention. And now what we're seeing are these B2B organizations really thinking about, well, actually, how can we use WhatsApp to service customers? How can we think about all of these channels and start to service and be far more personal about how we're engaging with B2B? So it's similar to B2C because, we're all humans, whether we're B2C, we're all B2C and we're all B2B at some point. So I think, it makes sense that trend is happening and we're becoming far less formal, I guess, in the way that B2B customers are thinking about their engagement and service strategies.
Yeah, and obviously, just to end, we do see a trend. In the past, you do not use WhatsApp in business or Telegram in business. That's changing a little. What do you think is the most underused platform? For example, website chats or something like that?
Yeah, chats. Website chat done well is great. The problem is lots of people don't do it very well. And, you end up with all of these cul-de-sacs whereby you can't hand off and speak to an agent. It's automated. I'd go back to a lot of what Alfonso was talking about, which is research. And that's the only way that you will know kind of what are the channels that are absolutely right for your customers, how they like to engage, and again, going back to that, which is the channel that is most effective to get a resolution.
Okay, well, thank you very much, Sam. And now we are going to Anne from Amplitude. Anne, how are you?
I am very good. Thank you, Adam. How are you?
Yeah, very good. I can't complain. So Anne, tell us what Amplitude is very briefly, please.
Of course, Amplitude's a digital analytics platform. So essentially what we do is that we are the infrastructure between any digital product and the data that is collected when users use that product. And what we provide is a user interface for people to run their analytics, to build out dashboards, and to download all that information into whatever systems they have and they use to progress with that data further.
Right now, Anne, you're a senior field marketing manager at Amplitude. You've spent 15 years focused on customer experiences and working with solutions to help B2B and B2C companies improve their products and processes to build better customer relationships, customer experience and engagement. That's a mouthful, but you have a lot of experience in the area. So my first question for you then would be, given your experience in customer experience, often for services, I suppose you're lately more focused on the digital realm. Can you tell me a little bit about how the digital product category has evolved over the years and what's considered a digital product?
Yeah, I think I'm going to be repeating a couple of the things that I heard earlier. I was very taken by Alfonso's speech from user Zoom. So forgive me if I am repeating, but there were a couple of really important things that he said. So what we've seen over the past decades it's been going, really the first what we would consider digital product still is when websites started popping up, when programs were written, which then moved into a services industry that were rendered digitally, and most prominently when the iPhone came along with the move to mobile. Really, when we talk about digital products, it's been an infrastructure development. We've seen how the internet became more prevalent, how easy it is to now get things to be online. So this is what we talk about when we talk about IoT or Internet of Things, where basically everything can become a digital product that can be from an app on your mobile or any other device to a tractor that runs automatically across the fields and does some sewing, or it could be that you're going to the optometrist and you're trying on new glasses in a mirror where you're not actually testing the actual product, but the mirror is showing you what other options there are. So as soon as there is an interaction that can be recorded and that could be analyzed, we would consider that a digital product.
Great. And how do you see digital products evolving? Obviously, startups have played a big role in the category.
Really, startups were the original enablers and the drivers of digital growth. Many of the early disruptions have originated from startups because somebody saw a need and then essentially they created a better way to fit that need. So startups are, I'd say, probably the founding stones for anything that we consider digital products today.
Right. Now, Alfonso said earlier that you put the customer first. In essence, you do an amazing job, you do an amazing product, and the customers will follow. What's your thought on that? Obviously, it's a very good strategy to do, but do you think not enough startups are doing that, or they're doing things the wrong way around?
I actually think most startups are doing it because a lot of them start with the product in mind. They have an idea and then they build it out. And as I said earlier, most of the startups that we see these days are digital first. They are coming in to either disrupt something that has existed in a general world that they want to bring into the digital realm, or that is something that they're originating that has not existed before. Everybody's talking about the metaverse. So you can buy an island on the metaverse, for example. Those are things that just haven't existed and which startups are bringing into existence. And while that's great, and while they're focusing on their product, what they do need to do, and I think some of the VCs have put that very prominently, is you got to keep the user and the customer in mind. You got to find what the need is before you build the product just for the sake of building a product. Unless you have that perfect fit where there is a desire and then your product can fill that, the product can be just as good as you want and it's not going to do a great deal of help. But as soon as you have that fit, as soon as you figured out a need and you can build a product that can fill that need, that's what you want to focus on. And the second thing that you want to focus on is then the customer experience and how to create that either user interface or that particular interaction with those customers that will keep them engaged and that will increase their loyalty and their usage.
Great. And what I've noticed in Europe is there is a big focus on B2B. Maybe 70% of startups are more B2B rather than B2C. In terms of products, is there any, I suppose, particular trends in B2B and B2C specifically that you notice?
So as I was saying earlier, most of the B2B products are less of a interaction nature where you would, as a person, carry it with you. A lot of that is in the IoT space. So mechanical or something that is enabling machines to perform certain tasks. In terms of B2C, that is what everybody experiences as a user and as a customer. This is what we think of first when we think about shopping digitally, or when we think about apps that we're using that make our lives easier. We see in our data that it's actually 50-50. We do have a lot of companies that are focusing on the end customers, but that may be something that Amplitude just sees, because obviously for us, it's very, very helpful. The more data you have, and in a B2C environment, you have a higher touch rate, the more customers you have.
Okay, well, Anne, it doesn't seem like it, but that's the end of the 7 minutes. So thank you very much. And now we are going to move on to our panel discussion with Spanish startup founders and CXOs in the United States, in Silicon Valley, New York, and also Miami. So we're going to have Ricardo, founding Chief Executive Officer of Adhera Health, Managing Partner of Natural Bridges Ventures. And we're going to have Jordi, Managing Director of Woodside Capital Partners. He's also President of New Market Venture Management. And we're going to have Javier, co-founder and CTO of Kurai, and Roger, co-founder and CEO of Plaza. So if you just allow me a minute, I'm going to pin you all so we appear on the screen. Perfect. And Jordi, I can see you connected. Maybe we can start with you. I know basically we discussed earlier that Spanish startups have raised $4 billion last year, which was a 4 or 5 times increase in just 5 years. In your opinion, what is Spain doing right, and what could it learn about investing from Silicon Valley?
Hello, good morning and afternoon to all of you. What are Spanish companies doing right? I think one of the best things is that we've got really good engineers in Spain, really good entrepreneurs. What they can do differently, often I advise entrepreneurs, think global, okay? Spain is a great market to test a product, a solution, but investors are investing in global companies, I believe. And you've got to change your mindset of thinking about how you conquer the Spain market, maybe Latin America, maybe a little bit of Europe. Think global. If you want to think about the United States market, which is a very large market, very lucrative, think well, strategize in advance before jumping into it. And when you do, make sure you have the funds to be able to tackle this market, because it's a very expensive market to enter and in which to thrive. Expensive in the sense that it's very competitive, it's very fast. You have to be here, I believe, and you have to be very dedicated. But I think the overall message to entrepreneurs is Spanish startups succeed here when they do it well, as much as any other startup. And places like Silicon Valley are open to foreign entrepreneurs. Half of the people who live in the San Francisco Bay Area, the Silicon Valley area, we were not born in the US. It's a really global environment out here, very dynamic and a great place to do business, but you have to be really committed and well prepared. Use the Spanish market as a test and to de-risk your startup as much as you can in terms of product market fit, technology working, team working well together, having good strategies. And when you got that sorted out and you want to jump into the US market, then go ahead and do it, because many companies, many entrepreneurs, Spanish entrepreneurs succeed here when they are focused and really dedicated to this market.
Thank you. And Ricardo, what can Spanish startups learn from Silicon Valley?
Yeah, so it's interesting because Jordi and I, by the way, have known each other for a long time. And sorry about my voice. I'm in Barcelona now, but my base is the San Francisco Bay Area. You know, and I started many companies from Silicon Valley. And I have to tell you that, and I agree with Jordi, that the talent in Spain is very high. Quality is very high. And I look at the Spanish model of investment similarly to what the Israeli model was in the 1980s. Because there, you know, as you know, the industry was driven by the army, essentially. But in Spain, is being driven by energy in different sectors that in the past 20 years in Spain have grown a lot. And those engineers are as talented as any of the engineers that I have found in the Silicon Valley. So my advice is, somebody was talking about be careful with the burn. I think you have to be careful with your cash burn, but I would say that starting a company that starts in Spain with a Spanish talent gives you a lot of advantages that also were named here about lower cost, high quality, do the market fit to a certain degree, because I'm currently actually doing another startup, which is Hero Health, that has scientific background in Spain, but you need to always adapt to the other markets. So the adaptation is not as straightforward. And, you know, Alfonso was talking about the user interface and how important it is to understand who is ultimately going to be using your product. So do not underestimate the importance of that market fit, that you can prove the science and the technology in Spain and Europe. But when you go to the markets, and I've developed companies that have gone globally, you know, you need to look at those markets and be extremely focused. You've got to start in one very specific segment. In the United States, a small segment could represent a larger market than the whole European market in that specific segment. You've got to be very focused. Otherwise, you could have a great technology, you could have a great team, and you will get diluted in too large of a market. So be very focused. And my final comment is, talent is key, but you've got to understand that the talent has to be also in the place where you're going to be developing your business. So make sure that early on you develop partnerships with local talent, local companies, so that when you land in that new market, you have already head start. Don't try to figure out when you are in the plane, because it's going to be a hard going.
Javier, Ricardo, sorry, I'm going to edit that. Thank you very much. And next up we have Javier. Curai Health has raised a total of $38.2 million in funding over 2 rounds. Could you please let us know about your journey a bit, step by step?
Sure. Great to be here. Thanks, Adam. I will say we've raised a little bit more than that. I mean, this is the public facing raise that we've made. There's always bridge rounds and things that happen behind the scenes that add a little bit to that number. First of all, let me maybe state that I'm a little bit different from what I'm hearing other of the panelists, in the sense that our startup is born and raised in the Silicon Valley. So I did not start it in Spain and come to Silicon Valley for funding or for expanding the business. Although, since I've been here for many years, I do advise other companies that do that. And I try to advise entrepreneurs from Spain that come to the Silicon Valley in search of funding, especially, but also sort of like technical talent or whatnot. Going back to your question, our journey for funding is pretty traditional from a Silicon Valley sense. We did an initial round of friends and family, but very soon after we went for a Series A, and we raised from 2 of the top Silicon Valley venture capital firms, General Catalyst and Khosla Ventures. we based this early Series A round on vision and team. And that's something that I would say was traditional back in those days, and still is for companies that are born here in Silicon Valley. If you have a great team and you have a great vision, you can raise a Series A. You don't even have to have something that works. And that's a little bit of maybe mind-boggling for people coming more from Europe, where you have to sort of like have at least proof of what you built to even go into a Series A. And I've been advising other entrepreneurs that come here from Spain, and they do need to have more proof points. Now, in the Silicon Valley, at least until this new downturn of the market, if you had a great team, and by great team, I mean engineers coming from Facebook, Google, and Netflix. I'm a former Netflix. I started the Netflix machine learning team, and that's my technical background. So that gets you a lot of points. And if you have that plus a big vision like we did for healthcare, that gets you through Series A. Of course, for the next round, you need to show something else, right? So between Series A and B, we not only built a product end to end, but we also acquire another startup, and we had a sort of like a full end to end primary care health service and state-of-the-art AI that drives much of what we do. So that was Series B, and now we are waiting for Series C and waiting for the market to be at a point where we can raise a reasonable Series C. And Series C, you traditionally have to now show proof points of market fit, right? Those are the traditional 3 stages. The first one is about team and vision. Second one is about product and technology. And third one is about product and market fit. Now I'm saying that is the traditional one, but there's a lot of different paths to get there.
Javier, what was more difficult, Series A or Series B?
They're all difficult in its way. So I will also say for those entrepreneurs out there, when you read stories and you're like, gosh, it seems easy in hindsight, but it's always hard. Like even for us, we got a lot of no's. Like a lot of people that did not buy the story, did not buy what we were saying, did not understand deeply enough when we're talking about technology to see the difference between other competitors and say, no, it's not the same as what these other people are doing. So we literally got dozens of no's because we were also targeting sort of like the top VC companies, both in Series A and B. I would say for Series A, it's always like the unknown. Maybe you just need to shut down and go home and there's nothing to do. For Series B, we knew we were going to get there somehow because our Series A investors were even willing to sort of like continue and fund the company further. But it was more about finding healthcare related investment, which is a whole new other game. I mean, tech is one thing, healthcare is yet another one. And then you need to get people that are more used to understanding the healthcare space, and they're more traditional and they're scared of sort of like disruption and so on. So I think maybe Series B, because of what I'm saying, was the hardest one, right? Is where we had to really put our foot on the door of healthcare, and that took a little bit of finessing and moving around and finding the right partner that understood our vision, but also had a strong foothold on healthcare.
Great, and we'll go to Roger. Roger, you have founded and led several startups with 5 successful exits, very rare in the startup world. Can you tell us a bit about who these startups were and who were they sold to?
Well, I call them 5 successful failures, okay? Because I aim to build the next Google and I miserably failed, right? So I created 2 companies called Moebius and IBS, and they were sold to Dominion. They were consulting companies, the cheapest way to start a company, selling your time. The third one was Lantares, which was sold to Logicalis a couple of years ago, a business intelligence consulting company, okay? The other 2 were sold here in the Valley, one Power Data, sold to Informatica, and the last one, Password Bank, a cybersecurity company, so nothing to do one to each other, a cybersecurity company sold to Symantec.
And 5 exits, how did you value them?
Oh, carefully. It depends it depends. It's not a good answer, but it depends. You may have a company that has a lot of value in the terms of sales, okay? And then you have multiples on sales, EBITDA, call it whatever. Or you may have, as the case, for example, for instance, for Baskervine, when you get basically something really unique, technologically speaking, that fits a hole for a big company, corporation, and then you sell that value, that potential that you are providing to that new company. So it depends whether it's market, access to market, new customers, sales, or technology, access to technology, patents, etc. So it's two different. I tried both, actually.
Yeah, and I imagine every exit is a huge, huge process. Apart from valuation, what were the biggest things that you had to prepare for?
Several things. So first of all, you have to look serious when you're selling your company, okay? And the easiest way to go is to hire an M&A, okay? Not because they are helping you a lot, it's because you look serious about the process of selling it. That's one thing. So the second thing is you have to focus on what is the problem that you're solving for the company that is acquiring, okay? Because you have to sell them. I'll give you two examples. One is for one company we were selling to Power Data. We were selling, guys, you cannot be the #1 company in data management and not being in the 7th economy in the world, okay? You have to be in this market. So that was the big motto, okay? The big motivation, selling sales. And for Symantec, what I was selling is, hey guys, you cannot be the biggest security company in the world and not having the password issue solved, okay? And those are the two big things that you need to bear in mind. Once you have addressed the vision, why they should buy you, you need an M&A and you need a good lawyer firm, because those companies acquiring usually have very good lawyers and they can screw you big time. So you need a good, spend money on good lawyers helping you to sell the company. That's very important.
And when you started these 5 companies, did you plan to exit from the beginning or did you have no idea?
I have a good anecdote. No, as I said, I consider those 5 exits. We made a lot of money, but they are failures because we aimed for creating a new Google, okay? But it's true that everyone investing in your company wants an exit, okay? And I have a funny anecdote here. When I was about to get the third check from my investor, he pulled back the check and said, hey, who are we going to sell this shit to, okay? And so he was really, really focused on who can we sell this thing to someone else. The funny story is I got 5 years later, I got 3 LOIs from those 3 companies that I mentioned, okay? That was funny. But you should have in mind what are the exit strategies, not because you want to sell, but you know that you are creating value, right?
Great, and we have 2 more questions, this time for the whole panel. Any of you who wish to answer it, I'll put it in the chat box. When looking for funding, most startups talk to the wrong investors. What is your advice on this?
If you want, I can start. I would say fundraising is a full-time job. So a founder that is going to raise funds needs to be really focused, and there is a lot of research to be done, a lot of networking to get to the right person. If you can rely on somebody who can help you, that's great. In the early stage, brokers and investment bankers are really not liked by VCs. They don't like 5% of their investment to go to an intermediary, but it is a really a full-time job. And focus on that and network your way through and pull the string from one to the other until you get to talk to the right person. But very important, just talk to the right person within the right firm. And that's not only, oh, these people have invested in my space before. You need to know where their fund is in terms of, are they still have money to invest, or they have already used it all until they raise the next fund, and so on and so forth. It's a really full-time job.
Thank you. And Ricardo, I think you're next.
Yeah, I mean, I'll say that, and I've been doing this for a long time because I've already had 4 startups, and thank God I've sold a couple of them. And one thing in common is that you have to have the right investors. This is not different from an enterprise sale. You've got to analyze your customer. Your customer is the investor. And therefore, that fund has to be, studied. You need to understand what is the moment of the fund, and why they would be investing in your company, number one. And number two, what is the side benefit, the not clear benefit that your company will bring to that fund? Again, that comes back to research, because they are building certain practices. And if you are in the middle of the practice and the strategy that they are building, then they're gonna listen to you. Another thing is that you're gonna raise money or not from them, but you really have to go to specific targets the same way that you do enterprise sales.
Thank you. And Javier, Roger, do you have any thoughts on that?
Yeah, sure. I mean, I think there are many thoughts on this question. First of all, what is the right and wrong investor? That really depends on many things. And I think analyzing the market of investors as clients, as Ricardo was saying, is a great thing. But I've also seen people make the mistake of saying, oh, I want an investor that is really involved in my company, and then regretting that investor was very involved in the company, right? Because sometimes it's better to have an investor that just gives you the money and lets you operate and work with it. So it's really dependent on many of these things. And I also think that because of that, another mistake that I see a lot of entrepreneurs do is they build their story, their pitch deck, and they tell the same story to every single investor. And that usually, again, doesn't work, right? Because every investor values different things and wants to hear different stories. And that's part of the market analysis, right? It's like some of them you're going to convince more with the long-term vision. Some of them you're going to convince more with hard data. And many of them are somewhere in between, right? But I think the right investor and how to convince and how to get the right investor depends a lot on what you need, what you're looking for. And I would argue that if you get investors that are really, really involved in your company, then they really need to be very good ones. Otherwise, you're probably better off just getting investors that give you the money and let you run with it, because having a bad investor that wants to be very involved, that's a nightmare.
Thank you. And Roger, we can go into the pitches question. Let's talk about pitches. How many of them are actually good in your experience? I can't hear you now. I think you're muted. We'll edit that out. Classic Zoom mistake.
Yeah. Sorry about that. So those that live in the valley, because we live in the valley, they think that we are smarter, so they contact us and ask us. Okay, so we have the opportunity to see and listen many entrepreneurs pitch, okay, and ask for advice. So we've seen many pitches. One of the problems that especially Spaniards have, that we have, I'm ashamed of my first pitches, my first decks when I pull back from all files. We do not synthesize what we're doing, why we are doing it, and we are not able to explain our secret sauce. So I would say 90% of the pitches are really bad. 5% are so-so, and 5% are really good. There are people that are really good, but most of the time we miss totally the point, explaining a lot of irrelevant things, and we are not going straight to the point. Okay.
So 5%, yeah, sounds like an accurate number, I think. And
I'm generous today.
Yeah, and the rest of the panel, do you think 5% is an accurate number, or would you say more or even less?
I think Roger is right. Yeah, and I think the underlying point there is, if you want to pitch to American investors, you have to speak like Americans and communicate like Americans, which is what he just said. Synthesize. And we in Spain, in our culture, we tend to build the story from the beginning to the end. You start, how you started your company 5 years ago, and then at the end you make your final point. In the US, people think differently. You start with the conclusion. Then if there is time, you'll talk about how you started, if anybody's interested and they ask about it. Most likely not. Synthesizing your value proposition and all those other things that investors are looking for, that's the essence.
Yeah, let me just say something. I agree, but also think about the audience. Maybe that's the sales guy in my head. And is that the same thing to pitch to a Spanish angel or to Spanish VC than to pitch to a British or to pitch to an American? And what I mean by that is that of course, you need to understand them, but you also need to understand what drives their capital markets. So there is a lot of finesse, and the pitch needs to reflect what they are looking for. So it's not that I'm not disagreeing with Jordi, but I just think that what worked for the pitch in Spain will not work for the pitch in New York. And what worked for the pitch in New York, by the way, will not work for the pitch in California, because in New York, they are looking for something different. And we can go into more details on what they look for in New York versus the Silicon Valley. You're right, in Silicon Valley, great idea, great team. You have a bunch of Stanford graduates in your pitch, you get funded. In New York, they're going to be looking for more of the go-to-market, much more so than in the West Coast. Anyway, what my point is, understand who you're pitching and where those people live and what are their determinants.
Excellent. And I think, Javier, you can have the final word.
Yeah, no, I totally agree with what Ricardo was just saying. Not even West Coast, East Coast, like more healthcare focus, more tech-based focus. They're going to be looking for a different thing. I always advise entrepreneurs that come here with a pitch deck. I mean, besides sort of like some of the ideas about synthesizing and about turning the story around, I tell them just find a few VCs that you don't really care too much about and pitch it to them first and use it as an exercise, right? That's for me sort of like the biggest advice. Just go through a few of them, just burn a few bridges. It's okay. You're never gonna get your ideal VC on the first pitch. And maybe after you've been through 10 of those, you start seeing some patterns and some ideas of questions you get, things that are not clear, things that you might want to focus on, and then you're ready for the real pitch, right? And it is a full-time job, and it's going to take, quite a few weeks, if not months, to go through different channels. But I always advise, don't start with the one you like the most first, because that's likely to be a disaster.
And can I say one last thing? Very important. It's good to have friends, like in everything in life. So if you get an introduction, no, seriously, it's going to go a long way. They're not going to invest because you were introduced by Xavier, but they're going to listen to you. And having somebody listen carefully is already a must.
Okay, well, gentlemen, caballeros, thank you very much. I want to just say thank you to the four of you. Thanks to all the speakers. Thanks to everyone who came here today. I think following this conference, we have this new Telegram group for Spanish startups. We will share it with thousands of startups and investors in Spain and elsewhere. And we have events in Valencia, in Madrid, and in Barcelona happening in October. So let's meet face to face. Muchas gracias a todos por venir hoy. Era un placer. Me encanta España. Me encanta este evento. Gracias a todos. Ciao.
Thank you.
Adios.
Ciao, Adam.
Thank you.